The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this Tuesday the 29th of July. And my pleasure to be here, my pleasure to be following Steve Rhodes. Great 2 hours. We've got programming right through the day. We've got, let's see, after this, we've got the option now. We've got Daryl Martin, we've got Dave White, we've got Tom O'Brien, New Hours, of course, and that's 3 to 5. And then at 5 o'clock, you got Andy Heck, just great programming. Let's move right to the markets. This is such an important period because if I'm correct in assessing this as the start of a rolling over that began with the Dow, well, began with the IWM, the Russell 2000, that's gone on to the Dow, is starting to drag the S&P lower, the QQQ series, the NASDAQ, the NDX 100, still acting quite well, then what we're looking at here is something really important because bonds have exceeded their the resistance levels. The dollar is acting well. And the VIX, the volatility index, finally is refusing to come down. It's holding very nicely. I suspect that we've started a rollover and we've started a correction that should last many weeks. All you need is to go to a new all-time high on the Dow by 1 penny. And that'll say, you're wrong, Mr. Chapman. All you're doing is you're having a high-level consolidation, and that consolidation will take the market into a sideways trading pattern with just nominally new highs. But a lot of support in the Dow 16,800s, and I don't think so. Let me explain why. If you're looking at the E-minis right now, this is what I show my subscribers to my opening call. Fascinating because there have been stocks that we wanted to buy. I mean, how can I put this? It's a bifurcated market, but it is also a market of stocks and indexes. Now you can actually split them up and do a whole bunch of things because there are some stocks that are just looking very, very good. And, I mean, we have one long that's still acting very nicely. And I missed two. I missed one that moved up sharply from our entry point that we just missed it the other day. And today I wanted a long position, and it didn't even come down. It didn't even come down from yesterday's close to give us an opportunity to get in. I like that. At the same time, I'm wanting to add to the short position, because that's the way I see the market. And what I said to subscribers this morning in my opening call, I always show this chart. It is the daily and the 120-minute chart of the E-minis, the S&P September in this case. And what I had drawn in was this arch formation, the rectangle formation in the 120-minute chart. I said the technicals are improving in the 120-minute chart, and that 1977 to 1979, that area will be strong resistance. And then we'll have to see what happens. Well, it went right to 1979.50, has turned down, and we're now down over 3 in the E-mini. Something's going on in the marketplace. You never know. Some real quick moves these days, but all within a narrow trading range. This is nothing like 2008, 2009. Remember 500,000 points? Just nothing. Remember that one move of 1,000 points? Anyway, what we're looking at here, now down 4. So the E-minis are saying 200-period exponential moving average right here at 1967, that area, that better hold, otherwise you go below the low at 6 o'clock this morning of 1967.75. Oh, that's it. And if you start to get into this candle right here, the candle of noon yesterday on the 28th, had a low of 1960 and a high of 1970, well, 0.75. If you get into anywhere around 1964 today, That's going to say, uh-oh, watch out for a retest of the lows. Meanwhile, now the resistance is at 1972. So, and I drawn in, let me just show you how I love to do these different techniques. Very simple techniques that you can learn. Look, cup formation, arch formation, larger arch formation. A doji candle at the 1985.75 high of when? Of the 24th of July, 4 days ago. So far, that has been a repellent zone. And we will see if the E-minis close underneath the 9-period exponential moving average today. But so far, it looks to me like the MACD and stochastic are fading. Not good. Now what I want you to do is to go to the other indexes. We'll just run them down. So yeah, we just move this away. I'll make this real small. I think people have said that it kind of helps him to see the 120-minute chart in the corner here, as long as I can still see all the other stuff. So let's just do that. There we go. So I'm going to give you the numbers. Dow, INDU, is down $6 at 16,977. Had a high today. Let me just make this insert format, space to the right. Yep, 7, that's good. So in this particular instance, it's now under the strong uptrend line that was support. Now it's resistance, and that makes the 16,090s very strong resistance today, whatever that was that pulled the market back. But a Dow close under 16,950 today would say, hey, be careful. The scenario that I've been painting of a slow rollover is beginning to make its mark in the weekly chart, but this is not even the second day. This is a part of the second day. So let's just talk about it in terms of the close underneath 16,890 this week will be the first negative sign in the weekly. I'm not even sure it will trigger a sell signal in the weekly, but it'll certainly trigger a sell mode in upgrade in the daily. Now let's go to the S&P. I'll just run these numbers real quick. There we go. S&P is down 2.34. That made a doji candle on last week at 1991.39, and we're going to see, because it needs to drop a lot to even signal that it's starting to show weakness. Now it would be underneath 1959, the 9-period exponential moving support. Now let's go to IWM. IWM try to rally, hit the 9-period exponential moving average. It is, in fact, in a sell mode. The QQQ series has been acting really well. I don't even have an official sell signal because it hasn't closed under 96.47. If it does that, that'll give me at least a sell signal. Not even a sell mode yet, just a sell signal. Stochastics at 84%, MACD still good, so that's acting very well. And you can see that the 120-minute chart is trying to rally. It's within a little bit of a trading range. Now, a quick question. I'm going to get to that, and then we're going to get to our callers. I've got the Dow Jones Germany stock index making a double top, fractional high with a G in the weekly and the monthly, a G in the weekly, and we'll see, because on this particular index, this is not the index itself, but if the if the support, the key support at 333.22 on this particular, it's $DEDOW is the way I get it. Germany stock index is not. It is the Dow Jones interpretation of the index. So it's got resistance at 338, and that support I just discussed at 333. So now let's just go to this. It's very important. TLT making a doji candle so far. Doji candle yesterday, but a higher high. And this is leg D. MACD is very strong. Stochastics very strong. I'm monitoring this really closely, because if bonds, USU, continue to show their strength like this, it's going to take money from the equity market into the safety, so-called safety of bonds. We've got, what am I looking at here? So I did the, high-grade copper right now. It's just digesting the big gain to 3.2945, and 3.1877 is the 9-period exponential moving, 200-period moving average that it looks like it wants to retest. I'm suspicious of this rally holding its strength. My suspicion right now is that copper is going to pull back and go under 3.19. It's 3.229 right now. We'll get to some of the others. In the meantime, just let me show you that a good question in the den about whether I would look at the dollar and euro, etc. But this is very strong. This is the most powerful move in the dollar that I've seen. Now I would say I'd actually be prepared to call it King Dollar because of this. Out of 20 or so days, it has had tiny little red candles, one ugly red candle. All the rest are tiny, and green candles are proliferating. And the weekly has gone into leg B. So yes, first time I will say that the dollar is showing it is a leader right now because the EUR USD has tumbled. It is down now below the weekly 200-period exponential moving average. Let's go to our first caller. We've got Ben in the Back Bay. Ben, how are you?
Hello, you mean Jerry in the Back Bay?
Oh, Jerry in the Back Bay. Yeah, I do. Hi, Jerry. How are you?
Good. How are you? I got a new one. SAVE.
So SAVE is Spirit Airlines. It has just been an absolute beautiful. It has soared, as they say in the airline business.
I know. I bought it at 19 a few years ago, and I sold some on the opening today at 69.56. I'm getting worried that the transports are topping, and this, while they have fantastic earnings, it's a little ahead of itself.
Well, what I've been featuring in my newsletter is the IYT, and I've been discussing that perhaps the IYT is rolling over, and we've also got the healthcare industry like Aetna and Sigma starting to roll over, and lo and behold, Aetna today came out with great earnings, and they are down 2.64 at 82.18 with a peak E possibly in the weekly and the monthly in leg E. And I don't blame you for taking some outstanding gains in Spirit Airlines. It's in leg E.
But I want to know is how vulnerable is it?
I'm going to explain that to you right now. Yeah. It's going to be very interesting because in this particular phase that we're in right now, the leaders could possibly have a pullback with more buying coming in because that's where money will filter in as soon as there's anything like a couple of good days on the upside. But right. My suspicion is that we're looking at lower highs and lower lows, whereas some of the others, like I'm not sure I can put AKS, Alaska Airlines, which has also been fantastic. Yeah, Alaska Airlines hasn't got quite the momentum that Save has, but it's also doing beautifully. UAL right now, you see, UAL looks to me like it's more vulnerable. So let me go through the one that you discussed. SAVE trading at 66.79, down 93 cents. Had an absolute, Jerry, you got it near the lows. The lows were back in March of 2012 in the 15 area. It was lower than that, but that was really the stable area that started to build the base to move above the 9-period moving average. And it ran up to today's high of exactly, Jerry, did you notice? What did you notice about today's
number? 70. It hit 70.
Around number 70 high. Yeah. So we've got a break coming up. First of all, you've done exactly right. So now give me a moment. I'm going to do a little bit of work on the 120, etc. We'll be right back with Ben in the Back Bay and Scott, I believe it is, in Safety Harbor.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. The Dow is up 8. S&P's down 91 cents. I'm not sure what that selling burst was, but it's the kind of thing that when the trend has changed, then every bit of news gets treated as bad news, and we're going to be watching this real closely over the next few days. So SAVE, which is Spirit Airlines, had a round number 70 today. And that to me is really important because it's leg D in the daily, leg F in the weekly, and I just drew in something very important in my work, and that is a channel, up channel, very long-term up channel. It broke out just briefly back in March, April of this year. Then it pulled back, held the support. I don't like to make it too messy, but I am just for this particular purpose right now. Then what I will show you is how I will be looking at SAVE. And we have people in the den, some people in the den have done real well on SAVE. And as it stands right now, 64.48 is the 9-period exponential moving average support in the weekly chart. I'm going to the weekly because, Jerry, you always look at the long term. And I'm also looking at 61 to 63, let's call it 63, as very important support in the up channel. So all I'm going to say to you is Congratulations. That was a fantastic position play. What I am looking at here is 64.16. Let's call it 64-ish. Is the support in the 120-minute chart. I suspect that if there's another follow through to the downside tomorrow, rather than an inside bar on this 128-minute trading at about 67.5 to 68, if that happens, that's saying, we're not ready yet to go down, but it's good to take profits. But what I would say to you, Jerry, is if 64, look at 64 real closely. If 64 is pierced and it goes under 64, I'm going to call it round number 64. If it goes under that intra-week, watch it, because if on that any particular Friday, if it's trading under 64, I would then say to you, you know what? It might be worth your while taking just a little bit more off, but keep your core position. What I'm thinking is that if it has a period of rest, it could pull back. It could even pull back to the 55 level, 11 points. That's about 20%, 18, 20%, and still be in a major uptrend. So I wouldn't want you to do anything too soon, but taking profits off right now, I couldn't have said to you how to do it more perfectly. You just nailed it. And what I would say to you is I would treat this as an opportunity to put that money aside, banking it for save to put back in, but you don't have to feel obligated to do it. It's had a spectacular move. It might take a period of time, and it might even take price, and therefore that money in the meantime could be used somewhere else where you are feeling that you've got at least 3 to 5 weeks to make a decision whether you want to redeploy that money. So
all right.
I think you did the perfect thing, and I don't know how you stayed in so long now. In the 9-period moving average of both the weekly and the monthly, there is no signal yet, because
the management of this company is just extraordinary. I mean, the way they plan and the low fares they have are sort of mind-blowing.
And if you remember, the way they played oil a couple of years ago was also brilliant, because I can't remember now how they did it, but they used options. They used a particular methodology to make oil a non-factor in their...
They're very clever, yeah.
They are very clever, and I like that, because it means they've got a plan, they implement the plan, and you can see by the chart the plan has been working. So I don't want to interfere with your thinking. I just want to say to you, congratulations. But any little money you take off right now, don't feel obligated immediately to put it back. Give it a little time. I believe you'll have a very good opportunity to put that back. Congratulations.
Thank you very much. Thank you. Bye-bye.
And thank you for calling, Jay. Let's go to Scott. Let's go all the way down to Safety Harbor, Florida. Scott, how are you?
Good. I've got two for you, Basil. First is Apache, APA, and it just seems to be just kind of bouncing back and forth there.
So I'm going to go to Apache, which is APA. That's the symbol. It's trading right now at 101.38. It's up 11 cents. Before I even ask you what you're about to do, what you have done, I just want to show the chart. I used to have this beautifully notated. I'll have to redo it. But in the meantime, from the low that was made, the major high was at 149.23 back in 2008 when oil was screaming. That was in May. It pulls back, and it comes back to 51.03. And by my calculation, I would say that was cut by 2/3. Now what we've got is peak ABCD. It goes to E and an F. In the Chapman wave, underneath the previous high, goes to 134.13, April of 2011. I love the April-May time frames that it's got. Now it's having another rally, and it's in leg C in the monthly. We'll come back, and we'll be looking at Scott and a little bit more, looking with Scott at APA straight after this break. Hold on, Scott.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 12. S&P's down 3.58. I remain bearish for my subscribers in terms of the sentiment indicators, and we'll see what's going to happen here. Meantime, back at the ranch, we are with Scott and Safety Harbor looking at APA, which is Apache Core. Now, Apache Oil Service, are they drillers? I can't remember.
Yeah, they're a servicer. What's interesting about it is, they bumped up to 103 and 104 when the ISIS thing happened, started being made public over in Iraq. And what's so funny about it is, ISIS has taken more ground and more oil wells since then. And also, as you know, the trouble in Libya and Ukraine. But it's just not, no one's paying attention now.
It's not sticking. Now, this is very interesting. That was exactly the point that I was going to bring up. So thank you for bringing that up, because APA Monthly I have to put an up arrow because the stochastic's at 84% and the MACD is still good, and it looks like it's making the cup formation, trying to get up to the 112.09 area at some point this year. But so far, just as Scott has said, it's not doing very much. And then the weekly has gone to leg D, possibly peak D. The MACD is still strong, but the stochastic's pullback is still at 82%. But there's a big divergence now, and the relative strength is weaker. So then I look at the daily, and there's a beautiful pattern here. It went to a doji peak E at 102.34 high on the 23rd of June. Pulls back in a little stair-step manner, but basically it looks more like a kind of a rectangle-ish pattern, the H pattern with the lower right base. And then what happens is it spikes up, can't hold it, and then there's the news that Scott's talking about in POP. On the 22nd of July, what does it do? It opens at 103.81, and lo and behold, it makes a round number. We just spoke about a round number possible high in SAVE, which is Spirit Airlines. Suddenly we see 104 round number high at on the 22nd in APA daily, and it's subsequently making lower highs and lower lows. Not a big deal, but it hasn't even filled the gap yet. I'm going to make here's a suggestion. So this is the way I would look at it. I agree with you that so far it's not responding. It doesn't seem to be responding too much to an acceleration into the high 105, 109 area based on any oil situation. Even crude oil, when I look at it, it's not doing all that much. But these things spike when least expected. They're just out of the blue, like overnight you'll see something happen.
Yeah,
so
I agree with that. I agree with what you just said.
So I'm not going to exclude that. So this is the way I would be trading it. You see, if you were into options, I'd say, you know what? This is one where you get an out of the money, like a 103 or even a 104 call, and you hopefully on the pullbacks, the premium shrinks tremendously, and you get it for a pretty decent price. You don't get carried away. You treat it as like a white lightning play, and that if there is a spike, that spike should take it above 104. You'll be in the money. You can just grab your profits and you're out. On the downside, it'll be a little slower because the 98.24 level has support in the weekly chart. So here's my recommendation. Do you have a position right now?
Yeah, I've got a pretty large position in it right now that I got in at when it pulled back. I'm at 101.75.
Okay, but so on the long side, you're long right now.
I mean I'm long or short whenever I can get to the 104 is when I'm going to jump out.
Oh, okay. Yeah, so you are long, but it's just a little bit underwater as we speak, right?
Yes.
Okay, so that's very important to me. Now, let me show you what I'm looking at here. If I go to the 120-minute chart, right at this particular level is where there should be a base of support, and by this afternoon or by tomorrow morning, what you really want to see is not a break of the low of 100.67. What you want to see is a break of the 9-period moving average of 101.58 and a close preferably at or above 101.96. Let me explain why. Because the gap itself, normally when you see a gap, I can show you so many charts. I can go look at Facebook if I show you the 120-minute chart. What happens is there's trading in a sideways formation. And then there's a dip that tests the gap low. In this case, it was 74.51. But then it goes right back in to the body of that rectangle that was formed. If that rectangle doesn't hold, then you can start to see a greater testing of the gap itself. So Facebook at this point is down $1.28 to 73.63. I wouldn't be surprised if the 72s has to be tested. So now let's just use the same methodology looking at the 120-minute chart of APA. Right here is the same pattern. And the stochastic is flattening out at 23%, and the MACD is not so good. Now, you're holding this, and you don't have a very short-term time span. You're really looking at a move that should unfold over the next, let's call it anything from 3 to 5 or 7 sessions for APA to start getting back into the 103 area or higher, correct?
I'm looking at about 14 day.
Okay, so that means just for me, you asked my opinion, I would say to you that if it dips underneath 100.64, I'd probably say, you know what, just lighten up a little bit. You can always put that back in if it pulls back and then starts to move higher. But just for safety's sake, this is just my thinking, I would do that only because the gap to the bottom down to the 98.68 level, that is a big move. I don't think I would like to sit the 3 points when, in fact, what you're looking at is a potential, hopefully, 5 to 7 points on the upside, correct?
Yes. The only reason I'm not scared of that gap is it just has so many articles involved with it as to its value. Apparently, it's considered way undervalued by so many different people. That's
really what the monthly chart is saying to me. Just on a price basis, it's saying, hey, this is acting really well. There should be tremendous support, but I would say the support in the monthly could take you to the 98 to 97 area.
Quick question about GLW. It really went down today, so I got in a small position on Corning because it just, it's at $19.
Ooh.
But I don't have the same feeling. I don't feel like there's a lot of support there. Just let me remind you,
earnings, Gringo and the Den tells me that APA earnings come out on the 31st.
31st, right.
Yeah, so just keep that in mind. Okay, let's go GLW. Do this quickly because we've got Mark and Ford Collins waiting. The pattern that I'm looking at, this kind of gap down candle says within 2 bars, that's with by tomorrow, this afternoon or by tomorrow, you want an inside bar, and that 120-minute bar says you need to see it's trading at 19.90 down 215 right now, GLW Corning Inc. You want to see by this afternoon or tomorrow morning at 11 o'clock, by 11 o'clock the latest, you must see a move into the 20.20 or higher area.
Yeah, I never use stops, and I put an 1890 stop in this one because I don't have much faith in it.
Okay, I'm with you. I'm with you there. No problem. We're in agreement. So good luck with your 2 trades. I think that the one looking out, API, I think is the one that I think you have a real good chance that this can work very nicely. Congratulations on at least identifying it. Let's see what happens by Thursday.
Oh, by the way, I think I donated my $1,000 to Radio Shack. I bought $1,000 worth. I called you about a month ago.
Oh, that's right. Oh, well, that's the way. You knew it was going to be like that if it was weak. Thanks for calling, and I appreciate that, Scott. Let's go to Mark and Fort Collins. Hi, Mark. How are you? Mark and Fort Collins, are you there?
Hello?
Yes, hi.
Hi, how are you?
Good, how are you doing?
Good, I'm talking to you for a while. Hey, for a while there, you were looking to short the IYR via the SRS or maybe even the DRV, and it has been interesting. I've been following it, and it's interestingly, this is the first day that it's kind of tracking with the market.
With the market, correct.
It's been doing a lot of inverse trading with the market. Market down, IYR up, market down, almost like it's a safety play. What's your thought on this now? Do you think it's finally topping out, or do you think it's too strong to go short on this?
I was looking at it earlier this morning. I had no intention, actually, of shorting it this morning, but I looked at it and I thought, you know what? Today is going to be a test of whether there is, in fact, the play of dividend-type stocks, and IYR, folks, is the iShares U.S. Real Estate ETF trading at 72.90. IYR is down 27 cents. One of the reasons why I wanted to wait for today is the candle of yesterday, together with what bonds did, said to me, I would be considering shorting IYR based on a lot of what happens at the close today, because if I'm getting confirmation in my sentiment indicators that, in fact, even the stocks that I wanted to buy and we just missed and had a nice pop to the upside, if they give back most of the gains today, then what I'm looking at is that the market is beginning to say, you know what, the Dow has the IWM led, the Dow's following, S&P starting to weaken, the New York Stock Exchange has not made a new all-time recovery high. It's acting over the last few days. It went to that recent high. What letter was that recent high? Oh, we're still in a peak D. This is the pattern that we call the H formation. I'm very cautious here because I think I think that we could get the pullback. Now, the very big question here is: would you want to go for something that's occasionally been treated as a dividend play and a safety play, rather than something that is very weak like the IYT, which has said, you know what, Federal Express, UPS, there's the peak F in the daily, peak F or E in the monthly. This is telling me that you know now which sectors are weak. You know what I'm saying? I'm saying that to try to pinpoint to the top in a sector that's been very good and might become a safety play is harder than to look at the ones that have already turned down. However, look, your question is IYR, and my answer is if the IYR closes underneath 72.92 today, no, that wasn't right.
That's where it is right now.
Yeah, 72.92 where it is right now. If it closes under that, especially if it closes underneath 72.66, which was the low of the 25th, then I would say any rally after that you could short, but you're only looking at the rectangle formation between the recent high of 73.51 and the June weekly low of 70.62. So my eye says to me that in points, there's a better play in some of the other indexes, but in opportunity to short near the all-time high, IYR would be giving you an opportunity. Here's the other thing. If the IYR rallies and then stalls in the 73s by Wednesday or Thursday, just can't get above that, then the next pullback could be even sharper. It's because of the way the MACD and stochastic are acting right now. The weekly chart is still quite strong, so that's why I'm saying I would prefer to be looking at something else that has already shown it's got weakness, but there you might have to wait for two trades. One is to get in now, and then the other is to actually wait for a bounce to really put the position on. So that makes it a little bit more difficult. This one is closer to the high, makes it a little easier, but it's also saying, you know what, buyers are still holding it up quite well. It's only down 22 cents. But let me tell you something. The monthly chart is really what I'm focused on. And the reason is making a high-level consolidation in a cup formation. There is a chance that it makes another cup formation, and then it holds very well in the mid to low 60s, and then sometime as the summer is finishing, it starts a much bigger move to test the 76.21 area because it's made that soft double cup formation. So in patterns, if you didn't ask me, but I'm going to mention that the IYT is in leg E up. It hasn't even pulled back, so that would give you the greater number of points if, in fact, we are pinpointing right now that it's going to be a peak F in the weekly. That says time and price to the downside.
Okay.
Hope that
was my other question. My other question for you, and you got to it on the monthly, was whether it was going to actually make it up to its old high. And that was my concern on that, on shorting it, is because that's 4 or 5 points away. So. Well,
you see, you're absolutely correct. And the MACD is good. Stochastic's not great, but it is rallying. So, and the weekly chart so far, I haven't really got a signal. I'm anticipating a signal, but the week is not finished. So that's the reason why I'm just kind of avoiding it for now. You know what? There are many stocks that are highly vulnerable. So I wouldn't go for something that has a less opportunity to the downside just at this particular point.
Okay.
Hope that helps you, Mark.
It does. Thank you.
Thank you very much for calling. So let's do this, folks, because, as I said, for me, this last week was a really important week for some of the sectors and some of the stocks. This week is really important for follow-through in those sectors, but it's also really important to see whether the QQQ Trust Series, 97.51 was the recent high, trading at 96.71, is that going to pull back? So we've got a break coming up. We'll have one segment to go in the last segment.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Question in the den about Nestle. NSRGY trading at $75.91, down 53 cents. What was the question? Nestle. There you go. Basil, when you have time, NSRGY, Nestle, and if you owned it, would you sell some? I'd say I'd chew a little bit off the Nestle trade. Yes, I would. ABC, definitely I would be taking some off based on the pattern, because 76.97 is the 9-period moving average, and this week it hasn't even come close. I think it's going to target the 200-period moving average at the 74.90s next, a dollar down. That'll be the test. But everything about the chart says digestive phase. I like that expression. So take some off, and you could take some off right now, and then you might even want to put a stop in the 74s if you've had it for a little while. And let it tell you, 73 on the monthly, 74.43 is the 9-period moving average support. If it closes under there any week, it says could go into a trading range. Sideways move. Now, so that's that. Now, let me go through what I'm looking at. The VIX index. This VIX index is starting to rally. It's not very strong. And for me, actually, that's a great thing that it's not strong. I prefer for the market to be doing what it's doing right now without the VIX waking up, but holding very nicely the 9-period moving average at 12.38. It's at 12.81. If that volatility index starts to climb, I would like it steadily to go above the 1364 today and then close there. But in the meantime, as long as it's rallying, that's exactly what I'd like to see. I want to see, because we are short, we're short and we're long, but the short side of it says that I would like to see the Dow start to move below 16,850 to 830, that key support level. As soon as it takes that out, I would say that is a signal to me that you've got a weekly sell mode starting to take form. I need the end of the week to confirm. But most importantly, if the volatility index in the weekly starts to close at higher highs and higher lows, we have turned the corner in the trend. And my suspicion, based on everything I'm looking at, says that there's a really good chance that we have turned the corner trend-wise, but it is a slow process. You know, at bottoms, you make a unison low within days of one another, but at tops, remember the Dow 2000, middle of January top. You wait until March before you get the S&P and the SMHs. Folks, you've got Chad Cocoa coming up for the Options Hour, and you've got, brought to you by Think or Swim, you've got programming right through the afternoon, fabulous shows. So please stay tuned. And if you want to check out my opening call, this is a great time to do it as we're starting to put these new positions on. It's 2 weeks free. Just check it out right there on the front page of TFNN. Thanks for being here, and I'll be back tomorrow. Have a great rest of the day. Whoa, did I just beat... Did I beat the gong? Yes, I did. So good. For once, I'm a little ahead. So here, let me do this. I'll give you the S&P SPX.X. Days young, still have a little bit of a rally. But if the S&P takes out yesterday's low of 1967, closes underneath yesterday's low, all of a sudden, that weekly magnet of 1959, 9-period moving average, starts to take effect. So we've got a lot of things that are working right now to say there's a rotation going on. There are some stocks that are acting pretty well. There are others that are acting really poorly. Are we going to be rolling over, going from what's happened to the autos? Look at this. Ford is holding okay. It's not great. GM, it was looking terrible. It's still looking terrible. And look at AZO, which is the auto parts, acting very poorly. We have got a swing from one sector to another that's going on, and we're going to be watching it together with the XLF, which is the financials. So have a great rest of the day. Stay tuned for the Options Hour, and I will be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.